Scalping isn't hard, it is just simply misunderstood. In this video, I'm gonna teach you my one scalping rule that will instantly fix your trading problems and also skyrocket your win rate. This scalping rule is so simple and it doesn't require 100 indicators on your chart. And let's be honest, even a 5-year-old could use it and to make a lot of money fast. So with that being said, let's get into the video. Alright, this is the one and only scalping rule that will literally turn you profitable. Okay, if you use this correctly. So essentially, this is the candlestick cheat code. I like to call it a rejection of the candle. What I mean by that is when a candle literally rejects from an area, whether is it a fair value gap or the block, all that good stuff, right? Or if you use some other strategy, doesn't really matter. This is universal, okay? Because these candles, they work the same way and they will react to the area. And the way you actually understand and realize that it's a rejection candle is by spotting this huge wick. Wick is the small part of the candle, and this fat part of the candle is the body, which is where the candle is currently, right? And the key is to enter when the candle starts to reject from an area like an order block or, like I told you, whatever strategy you use, okay? Because we need to see the reaction. And I'm gonna tell you that most traders do not understand this. If there's a fair value gap, most traders will enter when they see the fair value gap and immediately when it taps into, but I'm just gonna show you the charts. All right, for this example, I'm going to use a fair value gap. So right here is a fair value gap. Now keep this in mind, you don't need to trade fair value gap. This rule works in every strategy. What you need to be focused on is the reaction of the candlestick, the way it reacts to the area. Now this is the reason why most traders fail in the markets and why their win rate is so bad and they just wonder why they're not making money at all. They place a fair value gap or an order block or whatever, like a supply and demand zone or something like that, liquidity. They place it and they wait for the candle to tap into it and they immediately enter once it gets tapped into, right? Like this, and then they enter and then the candle stops them out. This is the candle, and then they wonder what the hell happened. The thing is, we have to understand that the big banks, institutions and hedge funds, the ones who actually move the market, they have a bunch of orders that needs to get filled. If this fair value, like this fair value gap right here, has a lot of orders, right? But it doesn't mean that it's enough for the big banks to then switch the direction back into the option in this case, right? They can just continue down and take more orders, maybe from some liquidity areas like here, and then they can switch the direction back into the original option. All right, and now you may wonder, well, how can I know when will they actually respect the fair value gap? When will they actually go to the upside from the liquidity or something like that? It's by seeing the reaction of the candlestick. So if this now continues down, it obviously means it disrespected this fair value gap, disrespected this liquidity below and continues down, right? But if right here, the candlestick, this red candle, does something like this, it taps into this fair value gap and it leaves a huge wick behind it. Like literally the candle is moving at the same time, but it starts to go up. That means the buyers enter the market in this case. That means it's gonna go up, okay? Most likely it's gonna go up because there was orders that got filled right here by the big banks, okay? And then they want to push the price up, then you can make a lot of money, okay? It's that simple. Once you see this wick forming up, you can enter, okay? If the option was solid in the same place, okay? This is a fair value gap. A lot of the traders probably would enter once the price taps into it slightly, like immediately, like a freaking market order entry, right? But what they don't realize that this is also a fair value gap below. Maybe the price wants to take that as well, or maybe it wants to take these liquidities below, these lows right here, and then they get stopped out because they enter right here on the money on the fair value gap. What you want to see is the fair value gap getting tapped into and respected, meaning that as soon as it got tapped into, the price just starts to go up, meaning that buyers are entering the market. All right, that's how you make money. All right, and when you see the wick of this candle, when you see the buyers enter the market, that's when you also buy the market, because we want to do the same shit that these big banks are doing. They are entering when the orders are getting filled. Okay, that's when we need to enter, but obviously when we see the respect, okay, because that's when we know that the orders got filled. All right, this right here is a perfect example of a rejection of the candle after tapping into liquidity. What does that mean? There were a lot of orders. This is liquidity, right? If you don't know, liquidity. Now keep this in mind, you don't have to use liquidity to make money. I mean, you should use, okay, let's just say like this. But if you use some other strategies like supply and demand or some patterns, I'm not sure. If you mark some areas, what you need to see is this rejection of the candle, okay? Once it gets tapped into, that's when you should enter. Obviously, In my strategy, I need to see something more, something called a market structure shift. Different topic, but this tells us a lot. This candle, literally one candle, tells us a story. It tells us that the buyers are now entering the markets because a lot of orders got filled. That's the key, guys. That's the freaking key. And especially when you want to follow the trend with a fair value gap, like I told you, when you see this push up, that's an indication that a lot of orders got filled. Big banks are happy, institutions are happy, hedge funds are happy, and that's when you can be happy because you can enter and make money with them. Do not go against the banks, okay? Banks, they know the shit, okay? They know they liquidate people out of the market daily, billions of orders daily, okay? What you want to do is follow the trend accordingly when the price reacts from the area, meaning that, don't just mark some shit like randomly and then expect to make money. Once it gets tapped into, what you need to see is the reaction, okay? I've said this many times in this video, but that's the key, okay? Rejection of the candlestick, make money by seeing that, okay? You market an area, okay? Liquidity, fair value gap, or order block, or whatever, supply and demand shit, or some pattern areas. Once you see the candle, tap into that, you need to see the reaction of the candle because that means the buyers or sellers are entering the market. Okay, that's when you need to follow the market trend. And I guarantee you that this simple rule will actually generate you more profits, will actually increase your win rate. I could potentially enter right here when it starts to reject, especially if it gets tapped into now and starts to reject, I will enter and make money. All right, and now what I recommend you to do is go into the live markets when the session opens and perhaps use a demo account first and practice this scalping rule. And once you're comfortable, start using with real money. Okay, obviously when you're comfortable, when you're confident and comfortable with that. Okay, if you found this video helpful, make sure to comment down below and also like this video, subscribe, and thank you so much for watching. Okay, join the free Telegram, and as usual, I will see you on the other side. Peace out.